Pros and cons of a business credit card.
Our actual small loans do not have prepayment penalties. Businesses use the credit card as kind of almost a cash advance.
Welcome everybody to episode 9 of Take It to the Bank. My friend Tim Bridgers, I'm Ryan Thogmartin. And daggone it, Tim, we got one today. This topic is like relevant to anybody that is over the age of 18 and breathes on this planet. We're going to talk about some credit cards, baby. And
dangerous
business loans versus a business credit card. What are the pros and cons of both? And so let's start with what we've learned growing up our whole lives as consumers how to leverage a credit card. So in a business, that becomes really natural. We also have heard the horror stories and been taught about credit card debt and the bad,
Yep.
right? So let's start with credit cards because we understand those pros and cons of a business credit card.
Yeah, so I think when we think about the pros, let's start positive here on the credit card is, you can earn perks for your purchases, right?
Yep.
And if somebody's going to pay me back 1 to 3%, and if you're funneling all of your business transactions related to your bills and your spending needs, that can become pretty significant. That could possibly pay for some utilities and some other things, or maybe even your gas bill or light bill. I mean, it could be significant. So I think that's a positive, okay? I think another positive is it's a convenient way to funnel everything to one source. So when it comes time for tax season, you have appropriate record keeping and you have it all there and you can keep it really. And you can even, some of the apps and websites for these credit cards allow you to show the different allocations of your spending and you can really see what your business is doing. So I think data capture, it can be positive with the credit card. So I think those are two things. The other thing is if you have an organization where you have multiple people that have spending power, then you can monitor that spending because you can have access to the same account and see the statements and whatnot. So it creates accountability. So I think those are some key aspects. I think where we start getting over into the negative is if a business is doing that for those reasons, but they don't have adequate resources to track and reconcile those credit cards, then you are probably hurting yourself more than you're helping yourself, right? So if you're the owner and you're doing calls at 2 a.m. in the morning and you're doing services and you have little office time, you may want to forego the benefits that I just talked about if you cannot ensure that you're paying that credit card off on a monthly basis to avoid interest.
That's right. Why would you want 20% interest?
On something you didn't have to have 20% interest on. You
right.
chose to do it for benefits, not hurt. So I would say that's we start bridging the gap of the negative side is if you're going to do it, make sure you have the resources to help you maintain that. Very, very, very important. Now I'll say on the positive side real quick, I mean, I understand that some businesses use the credit card as kind of almost a cash advance on items that they're waiting on cash flow to hit for. But I think there are better solutions for that, and we'll talk about that. The big negative for credit cards, in fact, obviously today, is the interest rates. I know I can beat that interest rate. Right? So if you're wondering if we can beat that, no question, okay?
That's good.
So that's the negative. I mean, I think that compounding interest is detrimental to your business cash flow when there are other options for you to do that. The other negative is it's too easy.
Right, it's in our pocket.
Yeah, it's just, I need that. I don't, that'd be cool for my business, and I would avoid that mentality because it can be a snowball effect.
Yeah, and that information is just saved right in the phone or the computer. It's one click.
It's right there.
It's right there. That is a good one. All right, loans, business loans, like in you in conversation through other episodes have brought up the using a business loan for things that sometimes you would put on a credit card.
Yeah.
Because the interest rate is so much better and, you know, the terms are better, different things of that nature. So break that down for me.
Well, and you got probably more than this, but I'm thinking of two different loans in the small loan category that would fit this really well. The line of credit is perfect because the line of credit, you know, the bank is approving a certain amount for you. And, you know, as long as it makes sense and it's not out of pocket in terms of the balance and whatnot, if you need $1,000 to pay for a marketing campaign or something in advance and you pull from that, that's probably not going to be a big deal. And you're going to pay an interest-only payment of that at a fraction of the interest in your credit card. So that's a benefit, okay? But that line of credit is also excellent because if you hit a down period and you have a dip in cash flow and you've got some accounts receivables that you're waiting to get, and you need to advance some things, that's what the line of credit is so great for. Lines of credit are used a lot by like retail with inventory to where there's a lag between, you know, sending that inventory out and actually receiving compensation and that kind of thing. Or if you're paying for inventory and you got to put out a big chunk of change, you know, that's where that line of credit really comes into play because you're going to get that money back. And the cost of that capital and that interest-only payment is much lower than that credit card. Yeah. So lines of credit, you know, is one form of that. The other form is an actual term small business loan, which we offer both of those. And our actual small loans do not have prepayment penalties. So what's cool about that is you could treat it like a credit card. You could pay it off immediately, okay? But typically the loan is for something more of size. So like think about the retort that is going to cost you $250,000 to $300,000 with the upfit and renovation cost. Obviously, you don't want to put that on a credit card. Not too many people can, but those are typically slightly larger dollar amounts than you would use a line of credit. Although lines of credit are typically, you know, we've seen lines of credit from $25,000 to $500,000, depending on the need and the justification. So, again, just purely because of the term and the interest rate, no prepayment, way healthier option than a credit card. I think a credit card in your pocket as a business owner is healthy, right? Because it's way more convenient than having to call the bank, answer questions.
Right.
Okay. But I think if you could stay disciplined to stay away from that, you're going to put yourself in a good spot, unless you have resources to help.
That's the key word, discipline.
Oh, boy.
Discipline.
In so many ways.
So many ways. Awesome. Well, I love it. Thanks for breaking down business loans versus credit cards. And with that information, you can take it
to the bank.